All right. Hi, everyone. Welcome to day 3 of the 2025 Profit Playbook Synergy Traders event number 54, where we're going to bring the top educators providing actionable info and techniques that they use to make money in today's market. So this event is brought to you by TradeOutLoud.com and TimingResearch.com, along with our co-sponsors for this event, OptionProfessor.com, TradingIndicators.com, MadHedgeFundTrader.com, AlphaShark.com, AltaVest.com, TradesTrending.com, LogicalSignals.com, and our first presenter, Todd Horwitz of BubbaTrading.com, who's going to be starting in just a minute here. And of course, just a reminder, these presentations are for educational purposes only. Trading is not suitable for all people. Please consult a financial advisor and only trade with money you can afford to lose. All of the sessions are being recorded individually and will be available on TimingResearch.com. All right, so to start out today, I'm going to go ahead and turn it over to Todd Horwitz.
Good morning, everybody. Welcome aboard. What's up? And it's great to be here. And David, thanks for having me as part of the event. Always like your events. They're always good and solid. And today we're going to talk about our Market Maverick program, which is basically what we'll call part-time day trading. If you choose to do so, that's kind of things that we like to do. I like to share with everybody all the different possibilities that you can do, because again, there's a lot of things in trading that are available to you. And certainly you want to get the best that fits your personality and who you are as the best. But today, Market Mavericks, which is a day trading program, and it's actually part-time because you can do it when you want. A lot of my members are at work and at lunchtime they trade. Again, it's something that you can use on all markets at all times, and we'll go through this all. In the meantime, David just read the disclaimer, but it is, again, I'm not making any formal recommendations today. I may trade with you. There may be some live trades that you'll have the opportunity to trade if you want to do so, but past results are not indicative of the future. Again, you know that you've heard it probably 20 times already this week, and you hear it all the time. Again, I've done this for 45 years. This is going to be my 46th year coming up. I was a floor trader for 30 years. I am still actually a member of the Chicago Board of Trade, which is also the CME. I do a lot of TV and radio as well. In fact, I am the only guy on TV that only trades his own money. I don't trade anybody else's money. I trade my money and have done so for my, as I said, going to my 46th year. I have developed multiple futures and option strategies that also show some automation. So I've been teaching and coaching for about 15 years, which is about when the floor finally dried up and there was no more floor to trade. In the meantime, today we're going to talk about self-directed trading and the goods and the bads of self-directed trading, and they take a long time to learn. Well, what I'm going to share with you today is not going to take a long time to learn. It's going to take a lot of practice, but it's very basic and very simple, and the rules are going to be very basic and very simple as well. Okay, they can be expensive. We all know that programs can be very expensive. Well, again, obviously, you as a trader, you as an investor, have to make sure that you're managing your capital. So you want to make sure what you're spending on and making sure what you're getting, because of course, in this business, education is extremely important, but it's also what we would say the right kind of education that is important. There is too much to learn. And one of the things that I always recommend to everybody is try to master one type of trading at a time. Okay. There's, again, I can show you 30 different ways to trade the same market, but what you want to learn is how to master one at a time. Okay. So that you can become good at it, you can become proficient at it. Because if you think about trading is no different than playing games. Okay. There are certain games that are mathematically designed: bridge, backgammon, gin, and poker. Those are all probability games. Okay. During a game, the probabilities can shift back and forth. All you're trying to do as a trader is to put yourself on the right side of probability. Okay. That's what we want to make sure. So that's why we like to learn one part of it at a time so that we can master that, move on, and then learn more. Okay. And who is the best? Well, again, the best is whoever puts in the most effort and understands the psychology of trading and puts themselves in the best position will be the best. You can be a professional trader if you're willing to put in the work to get there. Now, again, I will remind you that there's nobody on the street corner handing out $100 bills, giving you free money. Okay. You have to work at it. You have to learn it. You have to understand it. Okay. And that is something that is extremely important. Okay. Because you can be the best. Okay. Everybody has the potential to be great in this business. It has nothing to do with you, like in sports, you have to be a better athlete. Here, you just have to be willing to work at it and learn it and understand it. And I think if you do that, you'll be extremely pleased with yourself and learn how to do it. And we use, or what we're going to talk about today, is known as the blow-off trade. Okay. And it's a very simple trade, but what the heck is it? Well, it's a trade that is built on the emotions of others. We are going to share with you how to work on the emotions of others, how to recognize when the market, when people on the trading floor are panicking, or on the machine are starting to panic. And it's interesting as I look right now, and I'm just going to flip over to a live chart real quick to see if there's something going on here. And there is a potential in crude right now. Okay. And I'm not going to go into actually trading with you right now, but this would be a trade that I would be looking at. If this volume will spike up past here, it would be a potential buy for us. And I will give you the exact details of the trade that I would be willing to make here as it goes. But we've got a minute to go before I can do anything. So I'll flip back to it in a minute as we talk more about what the blow-off trade is. But it's a sudden increase in price and volume, followed by a sharp decline in price and volume. And again, when a market gets, we used to have a saying on the trading floor: when you can see their tonsils, give them whatever they want, they're wrong. Okay. It's the same in the blow-off trade. Okay. When you see the market's moving dramatically, and let's go back here real quick and see. So we did not actually accomplish that because the market has already rallied before it was an opportunity for us to get in. And there is no other really trades. There are a couple that would be close that I would probably not take right now under the current conditions, because the market right now is very quiet. It has been very slow. And in fact, I've already traded live. I trade live with my members every morning for an hour. And we have not made a trade the last 2 days because, again, one of the keys to learning about trading is learning that it's better to wish you were in a trade than to wish you were not. Okay. It's better to sometimes pass. It's better to learn how to observe the market, because there are times when, even when things look okay, your opinion sometimes get in the way. So when you look at a blow-off, these are old blow-offs trades that we have seen and that we have made, which is why I show them. I do not discuss or talk about how trades did that I didn't make, but this is the general idea. You see a market, in this case, starting to go down. And of course, you see a massive volume spike at the same time. That is indicating to you that there is panic in the market. When they're going down, it is panic. When they're going up, there is jubilation. There is FOMO. Okay, we've all heard of FOMO, correct? So this is what you're looking for. You're looking for volume to spike, either up volume or down volume. In this case, it's down volume. And then you're looking for a reason to trigger. Now, I trade off of 4-minute cycles, 4-minute charts. Okay. Now, again, you can pick any time frame you want, because this works on any time frame that you want to trade off of. Does anybody know why, just out of curiosity, why I use a shorter time frame and why I picked 4 minutes out of all time frames I could have picked? Anybody have a guess? Okay. Well, I guess nobody's got a guess, but the reason is because most people use 5 minutes. So I want to be in there first. And the reason that I use a short time frame is because it lowers the amount of risk that I have to take, but I still have the same potential for profit. But again, if you don't have time or don't want to trade on 4 minutes, you can use 5, you can use 10, you can use a daily. Okay? It doesn't matter. And not only does it work on futures, it works on equities as well. Okay. It works on every market. So just let me take a quick peek here. And right now we really have nothing. There's some that are close, but at this point, the way the markets have been trading, I am not interested in making close. So why do I use this trade? Because a rally into a blow-up top can be driven by news or speculation about good news, growth, or higher prices in the future. But again, when a market moves too fast or too parabolic in either direction, what's going to happen is you're going to see almost invariably a retracement to the mean. Okay. And as you see on my charts here, okay, I don't typically use the Bollinger Bands. I use them to teach with. Okay. But you can see that you are now more than 2 or 3 standard deviations away from the mean. Okay. Markets don't usually run like that. There is going to be, especially in futures markets, because in futures markets, there's going to be retracing the mean because futures markets don't rely on earnings. They're not going out of business. There's going to be a demand for either financial futures or for the bond markets or for crude oil. So those are products versus stocks that are driven by earnings, and stocks can go out of business. Okay. But as we look here, we're not quite, you can see there's some heavy selling, but you can see that the volume itself is not leaving what we're actually watching. So it's very steady volume, not heavy. So what you're not seeing here is you're not seeing the fear to the downside, okay, in this case, because, or in the bond market, the note market, you're not seeing the chase to the upside. So none of these trades that we may be looking at here would be actually qualifiers. Now you can see that the S&P is starting to get through there. This would be a very close call. Okay. And I'm going to say to you again, I'm not going to make that call today because it's not clean enough and clear enough. And I have not had enough trades today. One of the beautiful things about this business and about what we can do is the more trades you can make, if you're always getting yourself on the side of probability, the more trades you can make, the more money you can make. Okay. The more risk you can take because you're making money. And that is something that we always have to watch for, is for those opportunities. Okay. You see here's a longer term chart, and you can see the spike in volume, the down bar, and of course the potential buy. And you look at these with a very objective mindset. You're not going into this with an opinion. Okay. Now, just for example, if I did define this as being a potential trade, which I'm not, but again, what I would do after this is I would flip over to my 1 minute time frame, because the 4 minute time frame in this case is the time frame that tells me that there's a trade available. I then switch over to the 1 minute time frame that then tells me that it does trigger a trade. And if we had made this trade, we would have been a buyer right about here. And again, the opening of that bar was 58.9275. So we've been a buyer somewhere in that neighborhood, right? I mean, we can get it cheaper right now, but again, and then I would have to establish a stop so that I know where my exit is. Well, right now, based on current market conditions, my stop in the S&P is 6 full points. Okay. So right now, the low of the move of the buy that I made was 58.87. So my stop would be at 58.81. Okay. And of course, I would let it trade and I would work targets. Now, one thing I will recommend to everybody, if you trade futures already, if you're trading micros, great. I want you to be able to trade more than one. Okay. What we like to be able to do is be able to have more than one so that we can get out of one at a profit, lock in the trade, and let the other one run farther if it's willing to do so. Okay. Does that make sense to everybody? So I make sure that I explain it properly so that you understand it. Tough crowd. Won't talk to me. Okay. All right. Well, the reason we do that is so that we can take one off. Now, we started the beginning of the year with an account with $2,000 in the account and with two micros. We're now up to 6 micros, okay, with an account at $7,000, okay? And that's starting with the micros. Now, if you trade the big ones, again, you want to be able to trade multiples because you want to be able to pitch some off, okay? That's really the key. You want to be able to get out of some, but you never want to be forced to make a decision that this is the absolute top or this is the absolute bottom, because nobody knows what that is going to be. We want to let the markets run. Okay. So if we're on the right side, we want to let them run. Okay. And right now, again, there's no trades right now. You can see there's no action. So we'll just go back and go back and talk and show some pictures. Okay. But why I use it? Because again, the market blows off and returns to normal. Okay. The trade takes place and you get a return back. Okay, it's inevitable that markets will have a retracement to the mean. Again, we don't always know when, okay, but normally the faster that they move in one direction or the other, again, we have no opinion and don't care which side it moves to. But once they move and they get so extended away from, okay, and here's a live view. I'm going to show you a pictured view, but here's a live view. So they're so far away from the mean that there's almost going to retrace. Now, if you've ever used the Bollinger Bands before, okay, remember that these lines are always moving, okay? These lines are after the market, but they do give you a general idea that right now, basically every market that we're looking at here is either overbought or oversold. The bonds and gold are both a little bit overbought, which means there should be some retracement, but there's no real volume here. And the indexes, the Dow, S&P, Russell, and NASDAQ are all oversold. But again, for me, even though I can recognize that, there isn't enough action that convinces me that they're going to retrace quickly, okay? They might hover here. If you learn one thing about markets, learn this, okay? Markets are working three basic phases, okay? Markets, all trends or all markets are born out of consolidation. And you can see these are from one of my calls I do on a regular basis where I track the levels. But you can see that a market can consolidate, okay? It can break out to a trend, okay? And typically the trend will end with a blow-off. Now, it doesn't always, but here actually is a blow-off to the downside, which would have been a potential buying opportunity on a daily. Now, again, you can use this on any time frame and you can use it on any product. Here's one, just to change the topic real quick. I'm looking to sell here at some point because this is so far overextended. This is about 5 standard deviations away from the mean right now, okay? It's a stock, but again, it doesn't matter to me because the patterns work on anything. It doesn't really matter in how you decide to trade them. But the quickest, easiest way to be a part-time trader is to use what we call the blow-off model. And again, here again, you see, okay, the spike in volume, okay, and then the charge up in price. And this should create what we call the V-shaped formation, okay? That's what you're looking for. Anytime you sell a market that is rallying up too far or too fast, you're looking for it to return back to the mean, which should create an upside down V or a right side up V, okay? And these are things that we look at on a regular basis, okay? And it is, again, identifying the market and the condition that you're in, okay? And again, so we're watching this. Now, we've been together, let's say 20 minutes. We have not seen anything that's all that exciting. The one potential opportunity would have been here, but what I said immediately there is that there's not enough overall action in the overall markets right now for me to want to get involved. And one of the biggest lessons you can learn as a trader is to learn how to observe the market, okay? Again, you cannot go into it with an opinion. You cannot go in and try to trade the news. Your responsibility and your desire should be to react to the news. Now, for those of you who watch this, I would suggest tomorrow morning at 8:30 Eastern time when they come out with the Philadelphia Fed, watch it. There might be some opportunities created and you can see exactly what I'm talking about. I mean, we trade the jobs number live every month and we've done it for 96 months. We've made money 89 of those 96 months trading this model. And in fact, the model itself this year, we've only had 7 losing days since last January, okay? Now again, not every day is a big winner, but again, it's the discipline to be able to say, yeah, the markets don't look like there's much action. I don't really want to trade them right now. Or the discipline to get out when you've got a profit and to correctly moving your stops up. Because once you get one of your trades off, if you've got multiples, which you should, then you can move your entire stop to break even. So now you've taken out a partial profit and you're now putting yourself back into only can make money, you can't lose money anymore. Does that make sense? And feel free to ask questions as I'm saying things because I want to make sure when you leave here today that you've got an understanding of what we're trying to do. because it will help the rest of your trading as well. It will help you become a better investor and a better trader because, again, this pattern will show up in all markets all the time. It's easy to learn. Okay. Again, it's real basic. All we're looking for is two things. We're looking for price to go in one direction sharply, and we're looking for volume to complete it. Well, right here, you see price going straight down, but you don't see enough volume. So what all that's telling me is that there's no real panic in this market. Okay. Now, the band settings are standard. There are 2 standard deviations. Okay. 2 standard deviations away from the mean. But you can change those, but I don't see any need to change them. Again, I don't typically use them for myself. I use them to teach off of it because some people have trouble pulling the trigger. Okay. That this kind of helps identify that, yes, it is far away. But again, without the volume, I don't have the trade. Because to me, when I look at a market like this, all I'm seeing right now is just normal selling. Okay, this does not appear to be panic selling. The only thing that might indicate that there might be a little bit of panic selling is the VIX is charging higher, but it's got clobbered so much that it's really not going up all that much. Is there a special software? No, this is directly that you do it yourself and you watch it and you can look at it any time of the day. Okay. Again, we can trade this any time of the day. It doesn't have to be at the opening. If you're working and you don't have time to trade at the open, but you got time during the day, you can turn this on anytime you want. Okay. What happened in the past has nothing to do with the blow-off trade that I'm watching. In fact, we traded the election and made money on the election because of when the announcements started to come out, there were some blow-offs created. Okay. But again, you don't have to, there's no software. This is all you reading the chart or as they say, reading the tape. Okay. We use this, you can use this all day, but when you become a member, I trade live with you every day for an hour. And it's usually 9 a.m. to 10 a.m. Eastern, with the exception of Jobs Friday, okay, which is right at the jobs number. So we start at 8 Eastern and go to about 8:45 Eastern, because after the jobs number comes out, the trading dries up until the market's actually open. Okay. Can I watch a lot of markets at the same time? Well, you can see right here that I'm watching 8. Okay. I'm watching 8 markets, and I can see more because I can see if something's going on here. And one of the things that you can learn when you're watching this is that these aren't lighting up. Okay. If I'm not seeing a lot of movement here, what is that telling us? Okay. It's just straight volume. Okay. What am I seeing here? There's not a lot of movement. I can see that because this isn't lighting up like a Christmas tree, or a clearer picture is on Thinkorswim. I mean, we're not seeing a dramatic amount of movement, which means that there's no panic, which means that there's no emotion right now in this market. And again, to me, if I'm looking at this, I'm saying this is just standard, regular, everyday selling. Okay. Now there is going to be news coming out in crude oil in 7 minutes. So maybe we'll be able to catch a trade off of that. Okay. But in the meantime, again, get out of the loser cycle. Okay. Learn a strategy, learn a trading strategy, trade the strategy. Don't become emotional. Again, the biggest problem for most people that trade and that don't survive are those that become too emotional about the markets. I mean, listen, we all know that money is an emotional thing, right? But life comes down to 2 things, and one of them is money. Okay. And if you can't take care of your money, okay, and you can't control your emotion, then you really shouldn't be trading, because all you're going to do is lose your money and not have anything else to do. And David had a slide going there. How many millionaires do you know that had made $1 million in a savings account, unless they were born with it, right? Again, this is real trading that gives you real opportunity, because what you're really picking up here is the probability. Because what you're really looking at, trading itself, is a straight probability model. Okay. All the news in the world isn't going to help you, even if you had it ahead of time. And if you don't believe that, ask Martha Stewart, who went to jail for inside information that was wrong and she lost 60,000 instead of making a lot of money and went to jail for it. Okay. Your job is to learn how to react to the markets. Okay. And again, unfortunately, so far we're not getting a trade that we can make. But again, I'm prepared to trade live my own money with you should we get it. And again, we'll come back in a couple of minutes when the crude news comes out, because that might drive a little bit. But you have to get yourself out of the losing cycle. Okay. How many here have been in that losing cycle and can't figure out how you continue to end up losing, even though you've traded really well, and then you find that one big loser? Anybody here have that issue? Don't be afraid to admit it. I know everybody's afraid because you can see the chat, but again, one of the first problems to identifying a problem is admitting you got one. Okay. And that's certainly very important, because again, listen, nobody's perfect. And what I'm teaching you and the things that I'm warning you about, I've already made those mistakes. Okay. I've already lost money. I can teach you, if you'd like to learn, I'll teach you how to lose 5,000 in $1,000 range if you'd like. Okay. I don't think that's in your objective, but I think that I could do that. I've done that before. Okay. Again, nothing is simple. Okay. It takes work. It takes recognition. It takes practice. Okay. And that's why we created this program. Okay. Because again, I teach it to you every day. I pound into your head every day what we're trying to do. I make live trades with you in the live trading room. Okay. Just like I'm going to try to do right now. I mean, I want to trade. I'd like to have some trades pop up here, but I am not going to force the trades. Now you can see that these, although they were not true blow-offs and we did not make any of these trades, but they are reacting somewhat similar to what we'd be looking for. But what I look for in markets is, I call it speed. Okay. When you look at a price ladder, here's a price ladder. Okay. Now, do you see any speed in this thing right here? It's virtually moving. It's just ticking back and forth, 3 and 4 ticks around. That's not enough. I want to see it disappear off the screen either direction. Okay. Then I know that there's some either euphoria or some panic going on. Okay. That's what we're trying. We're trying to take advantage of the emotions of others. Okay. But you can see that you are getting a response off of this oversold condition. Now, again, we would have no trades here, but this is a natural reaction, which is why the blow-off trade becomes so much more important, because when the markets move too fast, the likelihood of a quicker retracement is right there for you. Okay. Does that make sense? The faster they move in one direction, the more likely you're going to get the blow-off return. Does everybody understand that? Okay. Now, again, we trade the first hour each day. Sometimes, like tomorrow morning, I'm going to trade we're going to start at 8:35, right after the news comes out. Okay. But normally it's 9 to 10 Eastern time. Normally, I usually come in about 8:45 anyways, because in case something's going on, I want to be able to help anybody. But the blow-off trade is called out live. I'm going to call the trade like I'm trying to do now. If we can get one, I'm going to try to call one for you right now. Okay. And I'm going to make it. If we can get one, I'm going to make it. Okay. Because that's exactly what we like to do, right? We want to be in the market. But again, as you can see, there is a true lack of real activity right now. So is it prudent to you to be trying to actively trade right now? And that's always a question you have to ask yourself. Okay. Now, when the markets are like this, there's a lot of things you can do. You can sit back and learn. Okay. You can study. But if you look too hard, many of you will see a mirage of a trade that you think is there because you've been staring at it so long. If you don't have the discipline and the self-control to not make a trade when it doesn't qualify, and you're going to make a trade that doesn't qualify, then maybe it's best you turn the machine off and then look again later. And if it's not there, then turn it off again. Okay. Again, it's this business. Again, it's always better to wish you were in a trade than to wish you were not. Okay. That's important for you to understand, because at the end of the day, when you make bad trades, they hurt the rest of the trading you're going to do, because then you go into the mode that I just want to get even. Okay. So now news just came out on crude. Okay. So let's see if we get the volume spike to go along with it. This is what we're watching for right now, okay, to see if we get a volume spike. And it doesn't appear that, well, maybe we will, okay? I want to see the volume get up to here, okay? That's what I'm looking for, okay? You can see it's a little bit faster, but not much, especially off of a news item that just came out. Okay, so there you go. So now I'm going to let this bar close out. Now, normally, if you were with me in my room, okay, I would go flip over early, but I don't want to teach you that yet, okay? But we're going to let this bar close out and see if it's still coming down. Okay, you can see it's a little bit faster than everything else right now. So there is some selling going on. There's a little bit of panic selling going on. Okay, I'll see if it'll stay down here, because then we'll flip over to our 1 minute and look for an opportunity to make a trade. And I will make it. You'll hear my machine if we get an opportunity. But certainly you can see that the volume has exploded. The price has come down about 50 cents. So we're gonna get ready to look at it. In fact, I'll go ahead and flip it over now. Okay, and see. Now, right now, as it sits now, my stop would be 68.37 would be my stop. Okay, 68.37 would be my stop. If this bar stays green, then I'm going to go ahead and buy it. Okay, 68.37 would be my stop. And now what you got to ask yourself now is the risk too great when they run back a little bit too fast? But again, I'm here with you live. I'm going to trade it. Okay, and I am in, and so I'm working to sell. I'm going to sell one at 10 ticks above just to get some profit out of the trade if I can. Okay, and I'm going to sell another one because I've got 6 on. Okay, so now I've now got 1 off. Okay, and now I'm going to put my stop in a break even. Okay, so now I've made money on this trade, and now I'm going to my stop's at break even, and break even means that you have enough to cover the cost of trade, the cost of commission, and I'm going to let it run. Okay, I have nothing to worry about now. I just made 30 ticks. Okay, so I made on a micro, I made $30. Okay, on a big one, I made $300. Okay, and I still have an open position that has no risk to it. Did everybody follow that? Any questions on that trade real quick before I flip back to teaching and talking about it? Again, feel free to fire away if you have something you want to ask. But in the meantime, the trade's up, okay, and it's profitable, and we made money. And we cannot lose. It cannot take it away from us because we're locked in at no worse than break even. And there is the pattern. There is the retracement pattern that we're looking for. It is called the V, okay? In this case, it is to the upside. And it's still going in our favor. And we're nowhere near getting stopped out. How's that work? Okay. All right. So 8 markets watched. Again, you could do more. When I'm trading, when would you take profits in the rest of your order positions? Great question. Okay. What I would do, okay, is I would go back to my chart, and I would start looking at it. So I know that there should be some support right here. This was old support that became resistance. We broke them again. So I would look here as the first place. I would like to get a little bit more. So if I can get up, and if I can get up through here, okay, then I would move my stop right down just below here and have 2 levels of support to hold me. Okay. So right now it looks like it's potentially going to take me out anyways, but I'm still in right now, but this would be an area that I'd be watching, but I wouldn't move my stop yet. I'd like to get 2 support levels based on a 4-minute chart or a 1-minute chart that allow me 2 areas that it's got to break through before it takes me out. Does that make sense? And my stops from this point forward can get narrower and wider depending on what the market's doing. This is all now chart dependent. Okay. If I get another big blow off to the upside, okay, which could potentially turn into a reversal signal. I might reverse, or I may just say, hey, I want to take the money and move my stop way up. But if I'm grinding higher, I might move my stop up. So, well, I'm stopped out now. So I made 33 ticks on the trade. Okay, I'm out. The trade's over. I'm done. That's it for that trade. Nothing else for me to do right now. And as you can see in the rest of the market, there isn't much else to do now either. Okay, but again, I'm going to watch these charts and use levels. So again, just to go through this would have been another level that if we would have broken through, then I would have put my stop up to here. And I would watch the chart as it would work up if it continued to go. Now, in this case, it didn't matter. I made my money, I'm out, and I'm on to the next trade, or I'm done. Okay. In the meantime, we trade these 8 markets, which are the NASDAQ, S&P, Euro, gold, Dow, Russell, crude, and notes, because those are the busiest of all the products. Now, you don't have to be limited to just those. But when I'm trading live with my members, I have to be very careful with liquidity, right? Because we don't want to become the market. Does that make sense, everybody? We don't want to become the market. So we have to make sure that we have enough liquidity, which is why when I look at these charts, I go, okay, here in the Dow on a 4-minute, I need 5,000 contracts. Never got near. So it would be no trade. Russell 5,000, 10,000. We're close on the NASDAQ, so I could trade that if it gave me a reason to trade it. Over 20,000 the S&P. Again, we don't have a trade, but those are the numbers. In the euro currency, 1,500 or above. Gold 1,500 or above. Crude 1,500 or above. And the notes 25,000 or above. So those are basic levels. Now, again, things can change, but the more volume, the more action, the better it is for us. Okay. You can use any chart software you want. Okay. I use TradingView. And the only reason I use TradingView for myself, because it's easier and I can share 8 markets clearly that you can see them. Okay. It's harder to do on other platforms, but I want to be able to show all 8 charts. Okay. Plus the fact that I have my 8 on 4 minutes and I have my 8 on 16 minutes and on 1 minute. Okay. So, but you can use any charting software you want. Okay. We have free charting software if you use our broker. Okay. We have a brokerage partnership. Okay. Which when I tell you what I'm offering you later, you can use their software at no cost. Okay. You don't have to pay for software if you don't want to. Again, I'm very cheap. I don't like to pay for anything. Okay. The benefits of the program, it's easy to follow. Okay. You just were able to, if you were trading with me, you just were able to make a little bit of money trading, because it's just like that. I call the trade, I call the stop, I manage the trade while I'm with you. Okay. And then your job is to continue to try to learn among that and continue to work on that, right? More markets, more opportunities. And this is the 4-minute model is based on, if I'm using 8 markets in a 1-hour time span, I should have approximately the potential of 120 opportunities. It doesn't mean I will, but that's again, all I'm looking for is the most amount of opportunities. Okay. I want to trade more and more often. And I saw the markets rallying a little bit on my ladders. So I just want to see if there's any volume with that. And of course there is not. So once again, I have no reason to trade into this market based on the model that I'm teaching you today. You get guidance from me live. Okay. Plus you can ask me questions. You can email me questions. Again, I'm very into teaching. I'm very into helping people. I've been very fortunate. Obviously, I've traded my own money for 46 years now. Okay. This is the only job I've had since I was 21 years old. Okay. So again, and I've always done it on my own. I've never taken anybody else's money. Okay. And I only got into teaching and coaching because I found out when I coached kids how to play baseball that it worked. And then when there was no trading floor, I had plenty of time to teach. So I started teaching. You can start trading right away and you can start potentially profiting right away. Again, I don't guarantee profits. Okay. I don't tell you that you're always going to make money. I just tell you that, again, we've made money this year. Okay. We've had, 7 losing days or 6 losing days the entire year. Okay. And again, that's what we're trying to always make sure you understand. You can start with a very small account, because with the micros, the micros are, are very little margin requirement, especially because you're getting day trading margin. Are you all familiar with what day trading margin is? You can trade for example, with the right broker, you can trade a big S&P, okay, with a $500 margin, which overnight that margin is $11,000. Okay, so you can trade with very little margin during the day as long as you're closing out during the day. Okay, but again, what we're watching is we're looking for opportunity based on how this all works. And again, although I'm seeing look at the retracement to the mean, 1, 2, 3, 4, 5. Every market came from that position when either overbought or oversold and retraced to the mean. And if we would have had the right circumstances and the right market conditions, then we would have been able to participate in it. But unfortunately, we had one trade, we were able to make it, but we did make it a profitable trade. Okay. Now, if you want to become a member, if you want to join me, okay, I've got two options for you today to join. Okay. You can come right away in if you want to use your own brokerage house, which is fine. We don't care. You can join for $1,000 annually. It's bubbatrading.com/Maverick. If you want to go with our broker, okay, you get 90 days for free as a trial and then $1,000. And that's bubbatrading.com/CTMav. Okay. Now, we also have other programs. We're very much an educational system. Okay. Again, I'm a big believer in education. We have other online classrooms that you can participate in and you can join into. Okay. Again, we're always teaching. In fact, we're doing some teaching every single day. And again, it depends. I mean, I trade options, I trade futures, I trade commodities. I teach hedging, how to hedge your long-term portfolio. So we always have classrooms going on that you can learn from. Okay. We have other online trading rooms that use different models. Okay. Again, that is something that you get to decide once you become a member. You get to see what we do all over the place. Okay. In some of our things, we do trade reviews after your first 100 trades. Okay. That is something now I review every day. So I don't do that part because every day we're discussing and I'm getting results from you every day because the results that I post when I send out the update every day and the invitation for tomorrow is the results that you guys tell me that you got. Okay, not the results that I got. You tell me what the results are, and those are the results that I post. Okay. Trader checkups. Again, we talk to you. We're a very open company. We want you to understand it. We want you to make money. It benefits all of us if you make money. Okay. Everybody is happy when they're making money. Everybody's miserable when they're not making money. Okay. And we have all the videos are in a library. So every day the live trading is recorded. You get a chance to go back and look at that library if you choose to do so. And of course, if you are in other programs, you get the full access to all the libraries. Okay. And there's a lot of extras. Again, you get to talk to real traders that are still really trading. Okay. I'm not marketing, I'm trading. I'm trading right now while I'm talking to you. Now, obviously, I'm not trading actively because in our stuff that we're watching, we don't have anything to trade right now. Okay. So why should I trade? Okay. This is why I was able to spend a lot of time on the golf course when I was younger. Because if there's nothing to trade, why should I force it? Okay. But there are other things that I would be looking at. Again, as I said, usually I'll go through a list and I'll show you, like I'll go through just a bunch of stocks. Apple's at the mean, there's nothing to do. Coin, I can tell you, is a potential sell. It's related to Bitcoin. And listen, I love Bitcoin. I think it's real. I think it's going higher. But at the end of the day, it's overbought. There's going to be a pullback. Okay. And that's kind of what we're looking at on a regular basis. We're always looking for ways to make more money and ways to do trades that you don't have to be overly involved in. Okay. And of course, we've got different softwares. I've got a bunch of automation things. We've got futures portfolios. We've got equity portfolios that are all automatically traded for you. Okay. And in the equity side, if you're an equity person, we've got a deal with Tradier that our commissions are $10 a month flat. Okay. There is no other payment. It's $10 a month flat, and our automated software for the equity portfolios is free. Okay. We've got some day trading models that use a little bit longer time frame that are done by automation. We've got our Q8, which uses a bunch of different indicators. Okay. The automatic, we do have Forex for people that are not in the US. Okay. But I can certainly talk to you about it. Okay. Because most people in the US would rather trade through the currencies through the CME because they're better. One thing about Forex, anytime one party is willing to take both sides of your trade, that usually tells you that you don't have much of a chance. Okay. Yeah, send me an email, Bubba@BubbaTrading.com. I'll be happy to take care of it for you. Okay. But yeah, all these automations can go into Forex as well. Please send it to me because I can't copy that from there. Okay, Bubba@BubbaTrading.com. Okay, but again, so when we look and we understand, okay, there's a lot of things you can do, but I always, as I said when I started with you, it is important for you to learn a basic model of whatever you prefer first. Okay, great. I will answer it later, I promise. Okay, and again, as we watch this, as we come to my closing of my time here pretty quickly, again, you can see that there's really not a lot to do. So if there's not a lot, why would I want to do anything? You have to remember that this business that you're taking up on, okay, is something that it must be. I did not get your email yet, by the way. Okay, just so you know, I did not get it as of yet. Okay. Again, I'm offering, this is a special. You'll see when you go through the link that it will not be that price. That's what it normally is. But we are offering a special because we do such a good job and we love doing this webinar with these guys. Okay. So it's something that we, like to discount, especially when David gives us the opportunity to come and be a part of this. We want to make sure we take care of everybody. And again, it's more important to me that you learn the business. It's more important to me that you make money. Again, I don't have to teach. I could just trade every day. Okay. I don't need to do anything. I can just trade, go play golf, but I teach because I'm tired of watching people get taken advantage of and losing money on stuff that they could never make money on to begin with. And that is it's been one of my mantras my entire life. I want to be able to help if I can. And I think that I can help most. Okay. Have a profitable experience in the markets as long as I understand that there's going to be drawdowns as well. Again, every day isn't Christmas. As I said earlier, there's nobody on the street corner handing out $100 bills. Okay. So in the meantime, again, if you want to become a member, it's BubbaTrading.com/Maverick for $1,000. You could be, or a 90-day trial, BubbaTrading.com/CTMav comes with a 90-day free trial. Okay. I didn't receive your email, but I did type in your email address, and I will get it. I will respond to you because I did not get it as of yet. Okay. For whatever reason, it might have gone into junk, and I don't want to take time away from. Yeah, I know it is. I know what you got. I got it. Okay. Are there any other questions? Again, feel free to ask me about anything about markets. It doesn't have to be about what we talked about today. I'm pretty proficient in all markets. Okay. And I'll be happy to help you, but I will remind you of this. Okay. Be careful. Make sure that you don't let the psychology of trading is very important. I trade both. I trade everything. I trade options on equities. I trade options on futures. I actually use on my Saturday stuff, which I have a Saturday options call. We do futures options combo trades. Okay. We do ratio trades. Like I said, every day I try to learn something new. Every day I try to teach something new. But everything that I teach always comes off of the same type of modeling. Okay. Because that's what works. That's what I used on the trading floor for over 30 years to be a successful floor trader. And that's what I've used here as well. What did you mean by being both sides? In Forex, the bank is the middleman. They take both sides of the trade. So what chance, if there's not a true price discovery, okay, the bank is taking the buy if you buy from them, and if you sell, you're selling it back through the bank. Okay. I'm not thinking about the FX. You're talking about Forex is one thing. FX market, which trades to the CME, is another. The FX market on the CME trades through open outcry. Well, not anymore. It used to trade through open outcry. Okay. And it was demanded by the traders, not by the banks. Okay. So anyways, I hope you learned something. I hope to see you as a potential member. Again, you'll learn a lot. You'll have a chance to make some money and you'll have a lot of fun. In the meantime, David, thank you so much for having me as part of your program. I enjoyed it immensely. And if there's any questions, I'm here for you. I know I got a couple of minutes left, and we'll just take a look at the markets for the last minute, see if anything shows up while we're waiting. You're getting something potentially now in the euro currency. Okay. I'd like to see the volume spike up there a little bit. But again, I'll be afraid to give this out right before I leave, but I will, if it does come in, I will call it. Okay. If it does show, and there's a fair chance it will, I will call the trade for you. But again, I hate to give out stuff that I can't help you manage when you're not necessarily familiar with what we're doing. Okay. So again, it is certainly a potential trade as we tick down here. But let's see what happens. So now we're going to clear through the volume that I wanted to get through. Flip over here to the 1 minute right now. If the trade shows now, the stop would be at 105.11. 105.11 would be the stop. And there's not a trade yet, but 105.29 half, I would be willing to trade it. Okay, right now there is no trade, so we'll see. And there is a trade. Okay, so if you want to make it, go ahead and make it. I made it. Okay, because that's what I do. What was I already forgot my stop. 105.11 is the stop. Okay. Again, if you remember, you want to piece it off. If you did take that trade with me, the Bollinger Bands are standard. It's 2 standard deviations. Okay. Okay. So again, in the meantime, if you took the trade, great. If you didn't take it, that's okay too. Again, it's up to you. Again, I don't want you to do anything that would get you in trouble. In the meantime, I guess there's no more questions. So I guess I'll turn it back to you, Mr. David.